Okay, the final exercise we're going to look at here in Chapter 12 is exercise 1217. It's on top of page 712. And let's read through it. As a long-term investment at the beginning of the fiscal year, Florist International purchased 30% of Nursery Supply Incorporated, 8 million shares for $56 million. Okay, 30%, then we're going to assume that they have significant influence over Nursery Supply Incorporated, which means we'll use the equity method of accounting for this investment. The fair value and book value of the shares were the same at that time. During the year, Nursery Supplies earned net income of $40 million and distributed cash dividends of $1.25 per share. At the end of the current year, the fair value of the shares is $52 million. Prepare the appropriate journal entries from the purchase through the end of the year. Okay, so we'll start with the purchase. So I went ahead and wrote in at the top 30% ownership. That would mean significant influence. So we're going to use the equity method here. So we're going to debit our asset account investment in Nursery Supply shares for the purchase price, $56 million. And we're going to credit the asset cash for $56 million. Right, that's for the purchase itself. Okay, then it said during the year Nursery Supplies earned net income of $40 million. Well, when we're using the equity method and the company that's owned, or the investee, earns net income, then that's going to increase the balance of our investment account. So we're going to debit this account again for Florist International share of Nursery's net income. Alright, they purchased 30% of the shares, so they get 30% of the net income. So equals $40 million in net income times 0.3. So that's $12 million, their share of the net income. And the account to credit is revenue account, investment revenue for $12 million. Right, that's the, I'll put this in for you. This was the entry for the purchase. This was the entry for net income. And then for dividends, here will be our entry. We're going to debit cash for our share of, or for Florist International share of the dividends. It's $1.25 per share on 8 million shares, but Florist International only owns 30% of them. So it's equal to 8 million shares times $1.25 per share. That'd be total dividends times the 30% owned by Florist. So that's $3 million. And then that's going to decrease our investment account. Investment in Nursery Supplies shares. And then for the fair value at the end of the year, no entry is required. Now you've seen the equity method a couple times. I hope that one makes sense. Now, it's only used if there's significant, if the investor has significant influence over the investee. So, you guys, I hope that helps you with this exercise. And if you have any questions on chapters 11 or 12, please let me know. Thanks a lot.